Good evening, folks. This is a quick review, and let you know this is what my results were for today. So 37.40 before commissions. You can see it's a live account. Okay, and I started off today. I only did work with NASDAQ, but you can see here we had just a consolidation day, taking both sides of the range, and then working back into the middle for ES, but I worked with NASDAQ, so we'll look at that. And you're going to hear my puppy snoring, so I'm afraid to wake her up because I won't be able to finish the video because she's been napping for a little while, so just have to put up with that now. I apologize. So I sent a tweet today. The 30-minute chart right in here, you can see we traded up into that. And here's the buy side liquidity. And you can see it trading right up into that level right there. I mentioned that, and taking out the buy side, and then pulling right back down into the 1 minute consequent encroachment of this buy side balance, sell side efficiency, which we'll look at when it's refined. You hear her snoring? That's the little fawn colored puppy. She's Scout, by the way. And this is the opening range. Okay, so we'll look at that on a. I showed this on a 30-minute chart, so let me show that actually there. So here's the 30-minute chart, and you trade up into that. I tweeted all this as the buy side, and then we pull right back down into the range. So let's go into a 1 minute chart, get right to it, because I don't want to spend too much time tonight. I'm actually tired, and I got delayed with my son visiting, and I don't want to do too much rambling on tonight. This week we have a rate announcement at Wednesday in the afternoon, 2 p.m. Just be mindful that the market will likely be a little fickle, meaning that it's not going to be as precise, not as symmetrical, meaning that both the ES and the NASDAQ usually move in concert and they move together. We're not seeing that so much right now, and it makes trading a lot more harder than it can be if you wait for symmetrical markets. And I think that we will see that on Thursday and Friday. So try not to risk too much. You know, try to keep your powder dry. If you're going to be trading, keep it real light. I was doing a lot of light trading today. I initially started the day wanting to be short, and this is NASDAQ here. And I wanted to use this small little gap right here. As it traded up into there, I wanted to be short. And it started off where it was moving in my favor, and I wanted to see it take out this low. And I tweeted, and my interest was 15,312, 15,300. I wanted to see if it can find its way down there. And it was unwilling to do so. Immediately came back, started running against me. My stop loss order on the short did not get hit. It stopped me out of the trade based on its movement. It was a lot more aggressive than I wanted to see it do. So what I did was I closed the position and used the stop loss order as my entry. So where I wanted to take a stop loss and exit at, I used that same level as an entry to get long. So I was buying momentum. There are instances where I will do that. It's only when I'm absolutely offside and I know that I'm going to be either ran over or the move is going to be much more pronounced to the opposite direction. And as you can see, we see that actually happening here. So I had a $1,700 loss that was immediately mitigated by having a reversal. And while it looks like I had a $3,760 winning day, I shared earlier in the day where it was like 20 something, $2,000 something dollars. Whatever, you just go look at the screenshot or whatever it was. I shared it on Twitter. And then later on I had another trade where I walked you through it all. But the buy side balance, sell side inefficiency here, I mentioned that. Trade up into the buy side. I mentioned keep your eye on this fair value gap. And then right in here, we drop down to consequent encroachment of this buy side balance, sell side inefficiency. And inside this buy side balance, sell side inefficiency. So it was in a discount. The market rallies back up, leaves relative equal highs here, but then there's a shift in market structure right there and right there. So we have a fair value gap there. Extend the fair value gap here at the 939 level. I tweeted this as well. And I was interested in how we traded there, but then we had this form. So with the Model 2022 rather, that's the actual trading model taught in 2022 on my YouTube channel. So it's a shift in market structure after taking buy side, trades right up into the fair value gap right there. Beautiful. Give you 3 opportunities to get short. Market broke aggressively lower, traded back up into a bearish order block, moved lower. I walked you through where a stop loss would have been managed throughout the entire process. I mentioned right here, as we got below this low here, take a partial, and we wanted to see it trade down into obviously lower targets than this, but I didn't get an opportunity to get my tweet typed out to do another partial right below here, right below these relative equal lows. It hit that and immediately started running higher. The last line of defense I had here, which was the 15,387.5 level, which is consequent encroachment of these two blue lines, which is this imbalance, this big candle here. It's framed by this candle's low and this candle's high, and you guys know what that is. That low, when that candle comes to that very level, to the tick, it's 15,387.5 is the low, and you'll see that right up here. See this figure right here? Look at this candle's low right there. There it is, 15,387.5. Folks, that's perfect. That's algorithmic. That's not made up. It's not contrived. It's exactly how I teach you the market's going to book. It rallies back up there. Also, it's essentially this candle's high, that candle's low, halfway point of that too. So there's a double-edged sword there for confluence. And the market does, in fact, start to rally again. And I wasn't in the market here. I wasn't watching anything here, but did run up, take relative equal highs, and traded back up into that 30-minute fair value gap, into consequent encroachment of that gap as well. Worked around that level, and then finally back down into that 15,387.5 level for the afternoon going into 3 o'clock. And then basically this chopped wood around there going into the close at 4. And then we've seen so far is this consolidation in a market that doesn't have any kind of advantages that we should be worrying about going into tonight. So keep your powder dry. Expect a lot of fickle price action. That means uncertainty and a lot of frustration. Okay, if you're trying to force a lot of things to happen right now before the rate announcement on Wednesday, you're gambling. Don't do that. Don't use maximum leverage. Expect cleaner price action and symmetry to return back on Thursday and Friday. Until I talk to you tomorrow, Lord willing, be safe.